a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about the best and worst performing areas of the first quarter. It was a turbulent first quarter, but ended on a very strong note. So it was very volatile during the quarter. Stocks had started the year on a strong note. January was pretty strong because there were hopes that we are getting close to the end of Fed's rate hiking campaign. But then we got some very hot economic data, including some hotter than expected inflation reports. So February was a weak month for stocks. And then in March, we saw a lot of turbulence caused mainly by the banking crisis. But despite all that turbulence, stocks managed to end on a strong note. Now, looking at the performance of major asset classes and major indexes, the S&P 500 was up about 8%. Nasdaq was a big winner. It was up more than 20%, and that was mainly because of hopes of lower rates going forward. So technology stocks benefit from lower interest rates. And also during the banking crisis, mega cap tech stocks were seen as safe haven. So they benefited a lot. The Dow was like barely in the green. Then safe haven assets like gold, they benefited from the turmoil. Gold was up 8%, and those returns mainly came after the start of the banking crisis. And the banking crisis also resulted in plunge for oil because there were concerns that this global crisis could cause a global recession. Broad commodity index was also down about 2%. Now, oil, as we know, is spiking today. It's jumping today mainly because of the surprise production cut by OPEC Plus. So we'll see how it does in the second quarter. The aggregate bonding index, which basically is a market cap weighted index of all bonds in the US, was up about 3%. International stocks also did pretty well. The developed ex-US index was up about 8%, whereas emerging markets index was up about 3%. A surprise big winner was Bitcoin. Bitcoin was one of the worst performing asset classes of last year, and it surged this year and gained more than 70% in the first quarter. Now, let's take a look at some more best and worst performing areas. Now, looking at the best and worst performing sector, technology was the big winner, up more than 21%. And as I mentioned, companies like Apple and Microsoft were seen as safe haven during the crisis. Communication services was a close second, up almost 21%, and that was thanks mainly to strong performance by companies like Meta Platforms, earlier known as Facebook. Consumer discretionary sector, about 16%. It benefited mainly from strong surge in Tesla. Tesla is in the consumer discretionary sector. Financials were rocked by the banking crisis, down about 6%. And energy, as I mentioned, oil prices were down a lot. So energy was the second worst performing sector, down about 5.3%. Remember, energy was the best performing sector in 2021 as well as 2022. Now, looking at some of the best and worst performing stocks, NVIDIA benefited a lot from AI buzz. So NVIDIA, as we know, is the maker, designer of cutting edge artificial intelligence chips. So up more than 90%. Meta platforms up 76%. So Mark Zuckerberg also started talking about artificial intelligence and focusing much less on metaverse in his recent conference call. Tesla up more than 68%. Then among the worst performing, as you would expect, First Republic Bank, Zions, Charles Schwab, all these were the worst performing stocks in the S&P 500 index. Now, let's take a look at the best performing ETFs. So, as I mentioned, Bitcoin was a big winner, which sent Bitcoin miners, which are seen as leverage plays on the cryptocurrency. These miners surged. This tiny Valkyrie Bitcoin miners ETF was up more than 100%. Then these growth stocks, aggressive growth stocks like Cathy Wood stocks, they also benefited from hopes of lower interest rates. So her next generation internet ETF was up 42%. Chip stocks benefited a lot from interest in artificial intelligence. So all chip ETFs, SMH, SOXX, etc., were up a lot, more than 30%. And remember metaverse? There was a lot of buzz around metaverse earlier, and then last year these ETFs had plunged. So this is the metaverse ETF by Roundhill. It is the oldest product in the space, and this actually had the ticker Meta, which was sold to Facebook after they changed the name to Meta Platforms for and undisclosed sum, probably in millions. So this was up 31%. And then, as I mentioned, there's a lot of interest in artificial intelligence. So AI and robotics ETFs also did pretty well. Now let's go to some of the quote pages on Zacks.com and web pages to learn a little bit more about these ETFs that did pretty well. So this is the next generation Internet ETF. ARKW is the ticker symbol. So it benefited a lot from the surge in Coinbase, which benefited from the surge in Bitcoin. And then Tesla is also, it is one of its top holdings. Shopify also did pretty well this year. So that is why this ETF and some other ARK ETFs also were big outperformers, big winners. Now this is the Metaverse ETF, METV is the ticker now. Let's see what it holds. So the top holding is NVIDIA. So no, not a surprise, this ETF emerged as a big winner in the first quarter. Then Apple and Meta Platforms, Microsoft, these are the other holdings. Let's take a quick look at what the chip ETF holds. And in fact, we have done videos on chip ETFs earlier too. Okay, so let's see what it holds. So the top holdings are NVIDIA, Taiwan Semi, and AMD. This is the Artificial Intelligence and Robotics ETF. So let's see what it holds. You can learn more about these ETFs by going to quote pages on Zacks.com, as I showed earlier. And then you can use the links to go to the web pages. It's always very important to learn about what your ETF holds. That's why I showed these links, and please use those links to go to sponsors web pages and learn more about what your ETF holds. Now let's go back and see what were the worst performing ETFs of the first quarter. So this hedge fund like ETF, Noble Absolute Return ETF, which holds short and long positions in many asset classes, this had this failed miserably in the timing. So it was down about 62%. Natural gas, we know, suffered from unusually warm winter, particularly in Europe. So it was down about 46%. The regional banking ETF KRE, not a surprise, it plunged due to the banking turmoil as investors dumped regional banks. Nickel was one of the best performing ETFs earlier, particularly earlier last year. It benefited from the war in Ukraine. This plunged 24%, and there was a lot of fraud reports. Also, there were a lot of fraud reports, but there were reports of stones instead of nickel in some of the bags, which were the underlyings for nickel contracts traded on the London Metals Exchange LME. So all that impacted nickel and other supply demand dynamics too. Then cannabis ETF was also a big loser, down about 21%, because we haven't seen any action from the administration or from lawmakers on legalization efforts. So that impacts. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our videos so that you do not miss anything. And I will see you next week.